As you probably know, in the past, the Real Estate Trends webinar has not focused on multifamily as much. But with the single family market in the US weakening, I am seeing overwhelming interest in apartments. I don't think I've ever seen this much interest before. So this year, we've expanded the apartment section, and I've also included a very visual story of apartments section. But first things first, let's start with a look back at 2018. Well, what can I say except 2018 really delivered? IMG's well-known analyst, Karlin Conklin, calls it exceptional. I wouldn't go that far, but I have to say it was a pleasing year. But all of that is in the past. Let's now look at 2019. Well, the consensus is for more of the same in the apartment market. I put up a comment from one really well-known analyst, but many others are feeling fairly bullish and confident. Here's a 1-minute clip from CBRE that really does a great job summing it up. Now watch for their insight about money continuing to flood into the US for commercial and multifamily from where? Singapore and Canada. The Chinese capital backed off a bit, but other countries just picked up the slack, making cheap debt and cheap equity available in all commercial sectors. Let's take a quick look. Come on, click, click, click. How do I turn this on?
Richard, we just came out with our 2019 commercial real estate outlook, and notwithstanding the fact that we've been predicting the next recession is 2 years away for the last 5 years, it still seems as though next year is going to be good and maybe going into 2020. What's going on, Richard?
Well, it looks like inflation is under control, and that puts the lid on interest rate rises. We've also got very confident consumers, particularly in America, and we've got a business environment which is very favorable to investment. So all of those things add up to a really good year for growth.
One of the things that makes me particularly optimistic, not just about growth, but about the commercial real estate industry specifically, is capital markets, where while we're not at a record level for international capital flows, we're seeing a ton of it and a diverse amount of it, even though the Chinese capital has fallen off. We've seen our Canadian friends, which have always been our #1 partner, pick it up, but also Singapore capital, which is not only greater in volume, but also the markets that they're looking at. That combined with a deep and diverse debt capital markets, where particularly non-bank financial institutions are providing very inexpensive capital, even when you get to some of the riskier parts of the capital stack, makes me very optimistic for 19.
Well, I would agree with you, Spence. We've got an emerging middle class globally who are saving more for their pensions, and that just gives you a supply of capital that's never ending.
Also, like multifamily in 2019, though I will say we are seeing some cautionary signs in the Class A segment where there's been a little bit of overbuilding. That said, B and C industrial, and in particular workforce housing, looks very attractive.
Whoops.
Notwithstanding some softness in some of the asset types, particularly A and CBD, we believe that 2019 is going to be a great year.
So you notice that their insight on multifamily is critical to understand as you're making your investment decisions. There is definitely evidence of overbuilding in many metros in the Class A rental market. That's the new buildings, nicer, newer, more expensive buildings. But older Class Bs and Class C rental buildings have very strong fundamentals, as he mentioned. So now I'm going to give you 5 big numbers that are supporting this long-term growth and these strong fundamentals. After all, with 7 years of rent increases, this cycle should be petering out. Nothing lasts forever, and there shouldn't be anything that makes the apartment market bulletproof, right? Well, let's take a look. Our first big number is 10 million. Imagine a mountain as big as Everest or Mons Olympus. That is how huge this number is. In the history of this nation, we've never created 10 million new renter households in just 10 years. That is a staggering number. But given the big declines in the home ownership rate, this was pretty inevitable. 500K is our second number. So we're going to continue creating new renter households through 2025. The pace is slower than before, but that's because millennials are now beginning to afford and buy homes because they have jobs. Keep in mind that we are struggling to build 300,000 apartments a year, so demand is significantly higher than supply, at least through 2025. Our third number is 15 million. It is a sad commentary on our nation that people are getting married less and are getting divorced more. Singles tend to prefer apartments, so apartments are becoming part of a lifestyle choice. Apartment living is now generally seen as a more manageable expense and flexible living arrangement than a single family home. Our next 2 numbers are about student debt. In a single year, student debt grew by about 6% to $1.5 trillion. That number was just 250 billion 15 years ago. That's right. Student loan debt is now 6 times higher than 15 years ago. The average debt, about $40,000. And it's forcing young people to push back their plans to buy homes. In too many cases, they may never get there. We're going to dive a little bit deeper into some of these areas in our multifamily report in 10 graphs.